Welcome back to another dividend investing video. I am your host, Bruce Wang, and in today's video, we're going to be going over my top 5 highest paying dividend stocks that I've been holding in my portfolio for the last year plus now, most of them anyways. So let's jump right into it. I got the bandana on, so you know we're going to be going at this pretty hard today, and let's jump right into the portfolio. So I'm going to refresh this to make sure everything is up to date. Currently, my portfolio is sitting at $48,370. I'm up on the day. Total income from this portfolio, annual projected income is 2020 for the year of 2020. And when it comes to my annual income of this portfolio, here's the monthly breakdowns of all the dividends that I'll be receiving. This is projected income, by the way, because some companies might cut their dividends in the post-Rona stock market here. So just be aware of that. Currently, my highest dividend month will be in December, which I'll be getting around $262, and my lowest dividend collecting month is going to be in January, which is going to be around $103. So every single week I'm investing, and you guys can follow me along, and you can see exactly what I'm buying to increase my annual dividend income every single week. Before you even ask about what I'm using in today's video, links are going to be in the description for the dividend tracker that I'm using, for the free stocks that you can get if you guys haven't signed up with Robinhood, Webull, M1 Finance. Links are going to be in the description for that. And let's jump right back into the portfolio here. So every single week, I'm investing roughly around $900+ now. I didn't start investing $900 every single week when I first started. When I first started, I was only investing roughly around $100 a week. And as I got more confident investing in the stock market, that's when I started investing a little bit more and more every single time. I'm not penny stock trading. I'm not day trading. I'm basically a long-term investor, mainly focusing on dividend stocks here. So let's take a look at some of my more riskier plays when it comes to my entire portfolio. Like I said earlier in the video, we're going to be going over the top 5 highest yielding dividend stocks in my portfolio. And I don't recommend this for every single investor out there, but if you guys think that the stocks that I'll be going over is something that interests you, then be my guest to look over them. So now let's jump into the 5 highest yielding dividend stocks in my portfolio. I'm going to be sorting this out by dividend yield, so you can see the highest all the way down to the lowest. So on average in my portfolio, my dividend yield is going to be around 4%. And these help bring my dividend yields up, obviously. The top dividend yielding stock that I own is PSEC. PSEC is a business development company. They loan out money to small businesses that can't get a conventional loan from a bank. And they charge them higher interest rates, and that's where they are able to pay a dividend yield that is so much higher than a normal company. I own 200 shares. My average cost is $5.85, and currently I am down 32% from this investment. And basically that is going to be from the Rona situation that we're in right now. A lot of small businesses are going bankrupt. You know, it's not really 100% their fault. A lot of it is coming from the Rona situation. Here are some things to look out for. Don't just invest in stocks with high dividend yields. When a stock has a very high dividend yield, that also means that their dividend safety is going to be very low. So as we can see here, the dividend yield is around 18%. And when we take a look at the dividend safety score, it's going to be a 30. This is 30 out of 100 here. Dividend growth as well is going to be very low. In the last year, it's -6%. But it does provide a decent amount of annual income for my portfolio, $144 from this one stock. One other pro tip that I have, if you guys are going to be investing in high dividend yield stocks, make sure that they are a small portion of your portfolio. If we take a quick look at the top 5 in my portfolio, we can see that it is less than 6% of my entire portfolio. And so basically what that means is that if any of these companies have a dividend cut, or they just pause their dividend for whatever reason, then it's not really going to hurt my entire portfolio. It will make a bit of a dent, but something that I should be able to recover from over the long term. The second highest dividend yielding stock in my portfolio is AGNC. I get ridiculed a lot for owning PSEC and AGNC on a weekly basis every single time I post a video, but it doesn't really faze me. So with that being said, AGNC is a mortgage REIT. Mortgage REITs provide financing for income-producing real estate by purchasing or originating mortgages and mortgage-backed securities and earning income from the interest on these investments. And typically with mortgage REITs, they have a very high dividend yield, and not so surprisingly, they're going to have a very low and unsafe dividend safety score. In the last 2 years that I've owned AGNC, they've cut their dividends by twice already, and still I'm holding them. The annual income from AGNC I've been collecting is around $144 every single year. Some of the reasons that I'm holding PSEC and AGNC, even though they are very unsafe for my entire portfolio, they do pay a very high dividend yield, so I'm able to collect a decent amount of annual income. And on top of that, specifically for 2019, I was able to make some profit when it comes to swing trading them. I would buy them at a lower price, wait for a few months or weeks, and I would sell them at a better price. And I was able to do that a few times last year, but when it comes to 2020, I'm not able to do that for obvious reasons. So my third highest yielding dividend stock is ALTRIA Group, one of the largest tobacco producing companies in the world. ALTRIA Group's main target market is in America, and they have other subsidiaries where they do product sales internationally. So I own just under 10 shares of ALTRIA Groups. Cost per share is sitting at $42.25 when the current price is $37. Very small percentage of my portfolio. Again, this is like a best practice when it comes to what I'm doing. Less than 1% of the portfolio. Current loss of 12%. And dividend yield of over 9%. That is pretty high. A safe dividend yield for me is in the 4% range or lower. When it comes to ALTRIA Group, it is a borderline safety score of 55. And man, last year they had a dividend growth of 9%. So they might try to not grow that fast this year, just so they can have more cash in their reserves for this pandemic that we're experiencing. So annual income is $31. Fourth on the list is Dow Incorporated with a dividend yield of 8.37%. Dow is in the materials sector, and they produce a lot of packaging and plastics and supplied all around globally. When it comes to Dow, I only own 9.18 shares. Again, this is a very small portion in my portfolio, 0.6%. And I'm down currently 4.7% on this investment. Current safety score for Dow is 45, very borderline, a lot lower than ALTRIA Group. And annual income from Dow is only $26. For my fifth high dividend yielding stock here is Wells Fargo. And one thing about Wells Fargo is that this is actually a free stock that I got from Webull. Webull, quick plug, I guess. Webull, you can get 2 free stocks if you sign up, if you're brand new. And it could also go up to a value of $1,400. So I wasn't that lucky, and I only got a $30 stock, which is still not that bad, especially for a free stock. So since it was a free stock, I didn't really do too much research about it. Wells Fargo is obviously one of the largest banks in America. So we're going to just gloss over this. And so for the actual fifth highest yielding dividend stock that I own is going to be EXXON MOBIL. The oil industry has been crushed in 2020, so I jumped into EXXON MOBIL a bit too early. I thought that when I first started investing in EXXON MOBIL, the average cost was around $60, and that was like $10 off of its all-time high. So I didn't know there was going to be an oil crash or anything like that. Obviously, I can't predict the future. And yeah, I just jumped in a bit too early. And ever since then, it just kept going lower and lower. And I've been dollar cost averaging my way. And currently, my average cost per share is $51.47. So within the last few weeks, ExxonMobil has came back a lot with a vengeance, I have to say. It went from the lows of like 30-something all the way back up to $45. So I still have a decent ways to go. I think I'm $6 plus off of its current price right now. And hopefully the oil markets recover soon when the economy starts to pick up again. ExxonMobil's dividend yield is sitting at 7.73%. And currently I'm down 12% on this investment. And the only difference with ExxonMobil is that I'm actually heavily invested in it. Currently over 5% of my entire portfolio. And this is generating me $201 when it comes to my annual income. And dividend safety is sitting at 55, very borderline. So ExxonMobil is a dividend aristocrat. They've been increasing their dividends for the last 25 years plus now. And one other fun fact about ExxonMobil is that it's been paying dividends for 100 plus years uninterrupted payouts. So it is a little bit concerning seeing that it is a borderline dividend safety. I wish that it was a lot safer than this, but just because of the energy situation, the oil market is in turmoil. That is why it is a lot lower on the dividend safety list. So just for fun, let's take a quick look at the opposite side of this dividend yield. So here are some of the stocks in my portfolio with lower dividend yields. And right off the bat, you can see that almost all of them, you can see that there's a gain when it comes to all of my investments. And on top of that, the dividend safety score is a lot higher, some of them in the 99%, 99 dividend score. So this is a great example of why not to chase very high dividend yields. And if you are, make sure it's a very low percent of your portfolio. When it comes to these stocks where the dividend yields are a lot lower, we got Apple, we got Nike, Microsoft, and we get over 10% gains on them on the portfolio. So there's a really no-brainer here. Most of your investments should be in a lot safer dividend stocks with lower yields. And yeah, just don't chase that high dividend yield. With that being said, don't forget to drop a like for the high dividend yield stocks out there. And let's jump into the portfolio to see exactly what I bought. So when it comes to my Robinhood portfolio, it is sitting just under $20,000, very similar to last week. So since I posted last week, the stock market has been very volatile, but you know, with every single week, I'm still staying very consistent here. So let's jump into what I bought this week. So when it comes to the Robinhood challenge for this week, I invested most of my money into Realty Income, AT&T, Starbucks, and I invested only less than $25 into Apple and SPHD. And with this week's purchases, I increased my annual dividends by just under $16. So one of my goals that you guys might not know right now is to get my dividend income to around $200 every single month. And I'm just a few $100s away from there. And I should be able to hit that within the next few weeks if there's no dividend cuts on my portfolio. Before we jump into the M1 Finance portfolio, if you guys want to see everything that I'm investing in, links are going to be in the description. So when it comes to M1 Finance, my portfolio is sitting at $16,430. On the day, I'm up over $100, not too bad. When it comes to this portfolio, it is very steady and very slow growth. When it comes to my entire holdings here, you can see that I'm pretty much broken even when it comes to everything that I invested into this portfolio, and I'm only holding 39 positions here. And one other thing that I'm trying to do is probably I'll be getting rid of a few of the stocks in this portfolio as well. So stay tuned and subscribe for more updates on this portfolio. Let's jump into the activities here to see exactly what I bought this week. So this week I invested $625 into this portfolio, and I bought 20 different stocks here. And you can see every single one that I'm buying this week. So one of the things that I've been doing the last 2 weeks now is that I've been trying to just gain more equity in all of the stocks that I've had. There's really no point in owning a stock and only having like $200 in it or less than $200 in it. That's really not going to do much for me. You know, I want to have thousands of dollars into every single stock that I own. I just want more equity into the stocks that I already do own. I don't want to stick with like baby amounts of money in there. $100 is not going to cut it right now. So if you guys want to see more updates from me, more videos from me, go check out these videos here. Stay tuned. Don't forget to like, subscribe, hit that notification, follow me on Instagram, follow me on my second channel, and I'll catch you guys in the next video. Thanks for watching. Bye.